Hi everyone, Mike Parker here again from Progressive Real Estate Solutions. I wanted to go over a pricing example for renting to own versus standard renting and a traditional purchase. So this example that I'm going to be using is based on a $200,000 property today. We're going to take a look at renting to own over a 3-year term, and an example of if you went out and purchased the property today with your own funds. Down payment, obviously if you're renting you don't necessarily have a down payment, but you would be required to put first and last month's rent. So an assumption that we're using in this example is a base rent of $1,350 per month for a total of $2,700 for the rental to get into it. On our rent-to-own example, we look for a minimum of 2.5% down of the property value. So at $200,000 you would need $5,000 as a down payment that you would get back in the future as a credit to go towards a purchase price. If you were to go out and finance and buy this property today on your own, you would need a minimum of 5% down, or $10,000. That's the minimum you would need to go out and purchase it today, assuming you could qualify with that loan-to-value ratio. Closing costs, renting, obviously you wouldn't have any. Rent to own, you would be deferring those costs until the future. If you did it on your own today, about $2,750, maybe a little bit more, maybe a little bit less. 1.5% is kind of the standard, so I'm a little bit lower there. It could be up to $3,000, but again, just as an example, about $2,750. Total money you need to get into the home of your choice today, and I use that term lightly in terms of renting for sure, but $2,700, again, that's first and last months. In our rent-own example, $6,700 down, plus your first month's rent, and this monthly rent-own payment would be $1,700. If you were to finance and buy it today, you would need a total of $12,750. Your monthly payments, again, rent $1,350, rent to own $1,700, and if you were to finance and buy the property today, $1,430. Now this number here could vary. Where I've got this number from, I took a mortgage that was default insured because of only putting 5% down. Took a bit of a guess here. $194,000 over a 25-year amortization at a 5% interest rate would work out to be $1,130 per month. That's just your mortgage payment. Taxes would be $250, again as a guess, and insurance would be about $50, which adds up to $1,430. Total payments over the 3 years. This is where it gets very interesting. Rental, $48,600 is basically just gone. That number comes from $1,350 times 36 months. Your rent-to-own payment over a 3-year example, $1,700 times 36 months equals $61,200. Or if you were to finance it yourself today, $1,430 times 36 months for a total of $51,480. Now, your savings from your monthly payments. If you rented for 3 years, obviously your money is strictly gone, I guess you could say, for lack of better words. $48,600. You didn't actually put any money towards anything, it's just gone. With our rent-to-own example at $61,200, well, you actually had $15,404 that you would have saved up as a credit to go towards your purchase price. Now, at the end of the 3 years in this example, you'd be getting ready to become a homeowner with these figures that we're talking about. And if you finance and bought today, I'm just showing a number of 0 because really you've paid it. It is going towards your mortgage, but you're not really saving anything per se. So whenever you take a look at the total cost after it's been adjusted for rent, $48,600, again, no savings. For a rent-to-own program that we have, you would have saved, as I mentioned, $15,404. So whenever you adjust that rate, $61,200 minus $15,404, you've actually put out $45,796. Okay, you can see where it starts to get interesting. This is where there's this big misconception about renting to own is so much higher than other means. Now, whenever you look at your self-financing and buying today, $51,480. So you can see we're renting to own our program on this example of $200,000. You can see how it does come in, and it does make a lot of sense if you do want to become a homeowner. For more information, you can visit our website, and you can fill out an online form, and I will contact you and get in touch. We do set up a no-fee consultation, and we look forward to helping you become a homeowner. Thank you.